Today, we're going to go through understanding how we can simplify that supply and demand trading strategy. Remember, I'm not here to trade for you. You're here to learn to trade for yourself. That's why I teach you the same concepts over and over again. It's so you can really understand what it is you need to become a profitable trader. And today, we're going to simplify your trading strategy with adding the line chart. So what we're going to do, we're going to add the line chart. Now we're on the US dollar CAD weekly time frame here. I'm going to walk through this pair on a weekly time frame and how I'd look for a setup on a 4-hour time frame as well, using the line chart with supply and demand zones. So the first thing I'm going to look at is understanding the line chart with a breaker structure. Now what we're using here is the last lower high in the sequence to downside, the break to the upside. That's going to leave me here an area of demand. And we need to zoom in. We're just going to zoom in, put price back on the chart. We're going to mark out the zone of demand here. That's our first weekly zone. So this is where we see the breakup. The market pulls back. It's a swing pullback here. Now we do have, I'm not going to sugarcoat this for you. We do have a breakout here as well. Understanding this concept with the line chart, this would be an area here of demand. Now price does come back into that demand zone. We push up, we don't quite take the high here, and we drop back lower. So what it's doing here is making a lower high to fall back into this area of demand again to take this previous low. So then what we do, we pull back, we have another breaker structure. That's going to leave me a new area here of demand. So now you can start to see that we're actually stacking our zones of demand using this concept, okay? We then pull back into this demand. So your first breaker structure is here, lower high. So there's a lower high pullback, and that means we have a new area of demand. I'm going to draw here. So you can see that the market has dropped back into this demand. We rallied back out on the line chart. We can identify where those breakout points come. There's another break to the upside again, which leaves me a new area of demand right here. Price comes back to that demand zone. We rally back up again. See, the process is very, very simple. Breaking structure, the last lower high, mark out a new area of demand. And you see that we start to continue to stack those zones of demand. So demand, 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 demand keeps holding. We then go back to price here, and you're going to see another breakout here. Now this is where price is going to come back to retest this level. I'm going to leave an area of demand right here. You can see how price comes back and perfectly retest that level, and we come into this demand zone where we see the last push higher. Now on the way up here, we do have this very, very small breakout here, which is valid on a line chart, and it's going to leave me an area here of demand. Now it's a rally-based rally area of demand, not a demand zone that I personally like to trade these sort, but as we can see, the market does come back into demand zone. At the same time as we do that, removes that demand, yes, potential losing trade, break structure again to downside, and that leaves me an area of supply. So we've got an area of supply here that potentially we can look for the market to come back to. Hey traders, we'll get back to the video in just a moment, but I want to give you a gift for hanging out with me today. I want to give you a free trading strategy class and cheat sheet. This trading strategy class and cheat sheet will go through everything that you need to know about applying a supply and demand strategy that I personally use to generate profits. But it's more than just a strategy. You're going to have some actionable steps to accelerate your growth with learning how shifting your focus can generate you more profits and the steps to building a profitable strategy for yourself. You don't have to spend a lot of time on this. It's about doing the right things in the right order, and it's free as my gift to you. So just go to norfolkfxtrader.system.io free strategy class sign up, or hit the link above now to get your free trading strategy class and cheat sheet. Now back to the video. Let's mark that out. So we have the push into supply here, which we could have caught an entry, understanding this, and you'll be targeting this area, okay? Zero demand, because still demand is in control. This is only what we class as the pullback stage. So look, this is where we can identify the market is basically making our swinging pattern here. see where we're going with this. Okay, so we're making a swing pattern and we're looking at the pullback continuation. Okay, so that's what we're looking at. But here we've now got a internal structure and we're pulling back. So if we now go back to our line chart, this is our dropout, looking for a break structure here, which then does leave an area of supply here. But at this point, okay, we have an area of supply here left over. At this point, we're also looking for a buy the long-term trend to continue up from this area. Because remember, this is our internal structural pullback from this move to the upside. So we pull back into this demand zone, and what do we then see straight away? We get our break of structure, this lower high to the upside. So what can we draw here? Another area of demand. So demand is in control again. So would you want to sell off this supply? No way. Even this supply up here I wouldn't want to be selling at. So anyway, we can see what happens. You would have had a losing trade here. We then have another pullback, another break structure. We don't get a pullback to this area. So on the way up, okay, before we even go into this supply, we've just created this new area of demand. So if we're seeing demand zones being created into an area of supply, you don't want to be trading that. We do get a reaction after taking out the previous test, okay, on this area of supply and a dropout. But let's have a look now how we can look for entries on a lower time frame out of this zone. So when we see the market pulling back to this zone here, let's see how we look for that trade using the same concepts I've just gone through here, but on our entry time frame on a 4-hour. So on the 4-hour time frame, this is where we can see price first pulls down into this zone. We do the same thing. We go to the line chart, look for the last lower high. That is right down here in the bottom of that zone. That means we're going to draw out our area here of demand. So remove this line. We don't need that now. So price drops into the demand and we break out. We go back to the line chart. There's our breakout. And we zoom in a bit. We'll add a new area of demand. There's our demand zone. Where's price come back to? That demand zone. So we're starting to stack demand. That's showing us that we're going to continue now out of this zone. This zone here, sorry, not this one. This is the next one drawn. So when we see price come up here, this became the swing high. Doesn't get broken until here, but we have an internal structure which comes to the downside back to this zone. Okay, so there's our breakout point and there's our pullback. Okay, so this is the swing high. And then we get down here, we can see we do break out of this swing to the upside as well. So this would be my demand zone of the origin of demand we draw here. So we're stacking those demand zones. That's what we're really looking for. The demand is stacking above demand. We do eventually come back, just about test it to the pip there. Depends on how you draw your zones. If we're drawing the zones from the full candle, so we come back in. If you use this as a zone on a breakout here to the upside, is it really valid? Okay, this is the breakout level, but it is valid from this breakout from inside here. So it would have been a losing trade. If you've waited for this breakout and then use this as an origin from this low, I'm going to show you what I mean in a moment. We have this area of our origin of demand, and then we also have a breakout, which is the breakout level, which is here. This is our main breakout of the swing pullback. Internal breakout is here. And you could use that as a breakout zone as well, and you'll be marking it out like this. Now that's got removed and you've had a losing trade, but then you've got another winning trade here in the market, and we can identify we have another break of structure of new area of demand here. If you stick with those origin zones, you're going to be much better. So we can see we're stacking areas of demand. Now we never remove this demand. We don't close it. We just wick through it into demand below, and then we continue up. And we have another break of structure here to the upside. And we can draw that out as a new area of demand. So we're stacking zones. Look at this. We had this on the weekly. And now we're doing the exact same thing on the 4-hour. And we're seeing the same thing. Demand is stacking on the way up. So we just continue doing the same thing. This is how you simplify a supply and demand strategy with a line chart. Again, area of demand, and we look for the next move up. Okay, this would be my breakout. This would be my area of demand. So that's my demand zone. Pull back in and we continue higher. Okay, I know this is in hindsight, but we can see here, there's a breakout, and then we draw the next area of demand. We come back in, and look, we stack. Even though we didn't stack demand here, we've started to stack demand zone again, which is good to see. We pull back. This is your main swing high for breakout. Now on an internal structure to downside, this is your breakout area. So we have an area down here as an origin as well. So you can mark this out as an area of demand. So it's stacking demand, retested here on this wick down, and we break out. Okay, if we look where we break out, which is here, this creates an area of a breakout demand zone. So right here is a breakout demand zone. That's where we come back in and we continue higher. And we just continue to do this for you. We break out again here. This creates a new area of demand, which comes back to that demand zone. Understanding where our demand is sitting, yeah? Demand zone. Again, whether you're drawing it from the high of that candle or from the body, you pull back to the line chart once again. Okay, this is our swing pullback now. This is our area of the origin. Now the origin is always going to be the best zone for you to use your demand on. Okay, we come back in the demand and then we push up. Now we fail to break out. That is not a good sign. If we do not see the continuation straight away, so we pull back again, high low, do we break out? And let's just mark this up correctly. Back to price, and eventually it looks like we do break out. But we break out here with this area of demand, which is the origin. And we do have a small demand zone there we can draw as well. But that's the breakout. This is the origin. We pull back into the origin. You'll have a loss there on that zone, and the market continues higher. Let's continue on. We have another swing high, breakout. That means we have a new area of demand again down here. Look at this, look, stacking demand again. Demand into demand, coming out of demand down here, stacking demand zones. So we just continue with this a little further so you can see the process going to break out there. Put price back on the chart, new area of demand. Now this time we don't stack out of demand. There's this demand zone and this demand zone has failed. That's the first time we've seen that area of demand fail fully. So when we see this, we can go back to the line chart. We can see this is our breakout area to the downside. We still haven't come back to this demand zone, but it does create a new area of supply for us to draw up here once we remove this area of demand. And that's how we look at it. We come back to this area of demand, which is that nested zone. And you can see we actually go deeper and then we get a push back up into the supply. And eventually the market does actually break that supply. So we come down, there's a breakout. Okay, so we removed this area of, do we remove it by close? Just close that area of demand, went deeper into these demand zones, held, broke out here, which then leaves us a new area of demand, which is still inside these demand zones. So when price comes up here, we break out, we do have this breakout area of demand as well. We remove this area of supply. So again, demand is now in control. We pull back in here, looking for the next break higher. So look, this is the swing high, I believe we're looking at. Let's check that out. Yeah, so we're looking for price to break this high. There's our breakout. So we have, this is our origin, which is always the best zone to use. So there's your origin zone. We come into it with a small bounce and we break through, remove both of these zones. And that is really what we're looking for. We're marking out. Now you're going to have losing trades. I'm not going to tell you you're going to win every trade because it's not going to happen. And that's where you need that mindset as a trader before going into a trade. This trade could potentially lose. Even though everything is looking great on the trade, it can still go against you and you end up having a losing trade. But stick with this type of simplicity in your trading with a supply and demand trading strategy and applying the use of the line chart. Is going to help you going forward as a trader. But if you want to learn more on the 2 time frame step approach that I went through earlier on this video, then there is a link coming up right now where you can go through that free trading strategy class right now.